The future of mortgage prospecting isn't more calls. It's better conversations. Spend enough time at a mortgage conference and you'll hear plenty of discussion about recapture rates. Everyone seems to have an impressive percentage. Far fewer people talk about the more important question: how do you determine which borrowers deserve a phone call in the first place? That shifts the conversation from measurement to execution. And execution is where the real opportunity sits today. Technology has changed the game. Servicing platforms and third-party data providers can already identify borrowers based on interest rate differential, estimated equity, loan seasoning, credit profile, property appreciation, insurance and tax changes, home equity position, changes in consumer credit activity, and increasingly, life event indicators. None of this is theoretical. The data exists, it's accessible, and most servicers and originators already have some version of it running in the background. The challenge isn't finding the data, it's identifying the borrowers whose financial circumstances suggest there's a meaningful reason to reach out. That's what transforms data into intelligent conversations. Think about the difference between two outbound calls. In one, the originator knows little more than the borrower's name and mortgage balance. In the other, they know the homeowner has built substantial equity, has owned the property for more than a decade, recently improved their credit profile, and may benefit from accessing equity rather than refinancing their first mortgage. Which call would you rather make? One is essentially a cold call. The other is a warm conversation supported by data. After 35 years in lending, I can tell you which call every originator wants to make. Nobody enjoys spending the day hoping the next dial uncovers an opportunity. We'd all rather spend our time talking to borrowers who already have a reason to take our call. Technology simply makes finding those borrowers much easier than it used to be. For years, many sales organizations emphasized daily call quotas. The assumption was simple: more calls would eventually produce more loans. Technology is changing that equation. The objective isn't to eliminate outbound calling. It's to make each call more informed, more relevant, and more likely to result in a meaningful opportunity. The metric that increasingly matters isn't dials per day, it's qualified conversations per day. An old rule that still works. Years ago, I worked for a company that purchased mortgage servicing rights. One of the rules was simple: if we could save a homeowner roughly $100 a month, they were worth calling. It wasn't a scientific formula, but it proved to be a remarkably effective psychological threshold. Those weren't cold calls. We already knew there was a meaningful financial benefit waiting on the other end. As one executive liked to say, it was like shooting fish in a barrel. That approach worked because we weren't calling everyone. We were calling borrowers who had a compelling economic reason to have a conversation. While payment savings remain an important trigger, today's technology allows lenders to identify opportunities that have nothing to do with lowering a borrower's interest rate. A homeowner with substantial equity may be a better candidate for a HELOC, a home improvement loan, or financing for the purchase of an investment property. The data simply points the originator toward the right conversation. Tomorrow's opportunity may not be a refinance at all. It may be helping a homeowner tap equity for a renovation, consolidate debt, purchase an investment property, or simply prepare for the next stage of their financial life. Today's conversation is different. The mortgage itself is no longer the entire story. Borrowers' financial needs evolve. Their mortgage strategy should evolve with them. The best originators aren't calling to sell a refinance. They're calling to understand whether the borrower's financial goals have changed and whether a mortgage product can help accomplish them. The conversation starts with understanding the objective, not pitching the product. Better calls, not more calls. The next evolution in mortgage sales won't come from making more outbound calls. It will come from making better ones. When technology helps identify borrowers whose financial circumstances suggest a genuine opportunity, originators spend less time prospecting and more time advising. That leads to higher conversion rates, shorter sales cycles, and a better experience for the borrower. Technology isn't replacing loan officers, it's helping them make better calls. The most successful originators won't necessarily be the ones making the most calls. They'll be the ones making the right calls.